Everyone once again. Please, can you hear me?
Yes.
I guess there was a lot of us because sorry, apologies everyone. So welcome to today's episode of the Peerless Horizon series. It's my pleasure to moderate this conversation on beyond interest free, building the operating backbone for non-interest banking in Nigeria. As the non-interest banking continue to develop in Nigeria, perhaps one of the most important conversations that we need to have is that non-interest banking goes beyond just simply removing interest from financial products. The real test is whether this principle underlining these products are translated into contracts, the processes, system, accounting, control, reporting, and ultimately the customer actual experience. So today we will be looking beyond the product name or the kind of contracts or or things around products and contracts. So we'll be asking more fundamental question. And what is this question? So the question will be, what does an institution really need? They need from operationally, from a technology angle, and also from a governance perspective to run a credible and scalable non-interest banking. So we have some lineup of excellent speakers who will help us to explore some of these questions from both the industry angle and also from technology perspective. We also want this session to be interactive. So there will be an audience poll during the session and a dedicated Q&A segment. So please, you can submit your question as the discussion progresses. But we'll be having a little adjustment to our, what's it called, our lineup. Also, we will be having our keynote speaker in person of Professor Bashir Ali to speak first on the non-interest banking. So let me just do a little bit of, let me introduce him, talk a little bit about Professor Bashir Ali. So Professor Bashir is the current Deputy Chairman of Financial Reporting Advisory Council of Experts of CBN. That is the Sharia board for CBN. Now, Professor Bashir is a distinguished Islamic scholar, jurist and authority in Islam and also non-interest financial institution. He served in academic and had a lot of key roles in terms of advisory, including being the special advisor to the Governor of Central Bank of Nigeria on non-interest banking. He is the current president of the Supreme Council of Sharia in Nigeria, and he has contributed extensively to the development of non-interest finance in Nigeria and internationally. Interestingly, just last week, this August, Professor Bashir was appointed as the chairman of the non-interest finance advisory council, the Sharia board for Bank of Ghana, our equivalent in Nigeria, the central bank. So the council, which will provide expert advice on regulation and supervision for non-interest banking in Ghana, and also develop the Ghana non-interest financial sector. His appointments, as we know, further reflects his extensive experience in non-interest banking, Sharia governance, and also Africa in general. Dr. Bashir, Professor Bashir, just trying to get used to. Hello, sir. We can't hear you. Okay.
Okay. Okay. Bismillahirrahmanirrahim. Alhamdulillah rabbil alamin wassalatu wassalamu ala asyrafil anbiya'i wal mursalin nabiyina Muhammad wa ala alihi wa sahbihi wa sallam tasliman katsira amma ba'd. Can you hear me, please?
Sir, if you can switch off your video, so maybe that will also help.
Oh, okay. Thank you. Okay. But am I audible now?
A little bit, I think we can manage that because I know that you're on
Yeah,
the road.
exactly. So you have to pardon me because I'm on the highway traveling. So you have to pardon me, please, for that. This was something unexpected. I thought the webinar was going to make me settle in my office or at home, but unfortunately things came out that I had to travel. Now, uh, I wish to congratulate the organizers for uh, delving into the area of non-interest finance, and I wish to also appreciate inviting me to, to speak this webinar. Uh, Definitely, this is another industry, and another industry. Okay, you see, if I see some people cannot hear me. That is the because I'm actually, the network the way it is. Uh, Audible now.
A little bit, sir, but you can go ahead,
Okay.
sir.
Okay. So as you all know, this industry is a new one. Probably it's just about 5 decades old, and here in Nigeria it's a decade and a half old. But despite the nascent nature of the industry, it has made significant strides globally and locally here in Nigeria. In the global scene, it has been growing in terms of assets, geographical location, and also it has been growing in terms of regulation. It has uh, it has conformed with the global standards of banking, capital markets, and insurance. The standard setting organization there are standard setting organizations that are ensuring the practice is harmonized, is standardized, that the global standards of the quality of provision for the industry has been tailored to conform the specificities of new type of financing through the Islamic Financial Services Board, which is a body that among the central banks and multilateral institutions to stand for the industry. It also conforms to the standards that are internationally set and recognized by the International Organization of Securities Commissions, IOSCO, uh, incorporating the specificities of Islamic finance in the area of capital markets. So, with the insurance supervisor standards, it conforms with them, taking into consideration the specificities of Islamic finance. It is also the accounting audit organization of Islamic financial institutions that issue standards on governance, accounting, and most important of all, Sharia standards to ensure that the products are Sharia compliant as presented to the to industry. There are also the international economic financial market that specialize in coming up with standardized contracts for most of the contracts that are being used nationally, especially in border transactions. There is also the system that issues uh, short-term liquidity management instruments that are highly rated, that are denominated in convertible currencies. So much strides, in the global scene. Here locally, since the the issuance of the first licenses, so much trial has been made. Licenses were not issued till there was proper guidelines on the regulation and supervision of the interest financial institutions issued by the central bank, guidelines on the governance of the financial regulation advisory council, which is the expert body that advises the central bank on issues of Sharia compliance in the banking industry, and the other guidelines of the governance of the advisory committee of experts at the level of the individual financial institutions. This has ensured that there is robust governance structures, and in addition, conforming to the corporate governance guidelines of the central bank, the Sharia governance guidelines which are compliant, gives confidence in the minds of the
All right, please bear with us as we try to get the prof back online. Just a few minutes, please.
Sorry, everyone. I know it's a little bit challenging because we are having because he's on the road, like he has explained. So one of the things that Sheikh was trying to run us through, Professor Bashir, was running us through is some of the history of non-interest banking in Nigeria, and also he was explaining some of the infrastructure that we have in place in running the non-interest banking in Nigeria. So I don't know if Sheikh is back now.
Yeah, I am back. Sorry, you
Okay, please go ahead, sir.
Yeah, it's raining, so the network gets disconnected. Yes.
Okay, please go ahead, sir.
Okay. So as I said, the essence of the non-interest banking is Sharia compliance. It is what sets it apart from conventional banking. And in doing so, certain principles are very key to this industry. The first and most important is the avoidance of interest. The taking and giving of interest is unacceptable, which is why all contracts for all products that are offered by this industry, they have an interest waiver clause, whereby the parties submit to the principle that the taking and giving of interest is abhorrent, is unacceptable, and if even by a court order, interest payment is assigned to a party, the party chooses on itself by the terms of the contract not to accept it and not to give it. Also, the prohibition of excessive speculation, which happens in the derivatives markets and in some forwards and in some commodity markets as well, is also abhorrent, as well as the practice is the basis for not accepting the conventional insurance, which is based on speculation and lack of certainty, as a result of which the alternative of takaful was created, which is Islamic insurance. Also dealing in some prohibited items, which is why these institutions do not engage in items that are prohibited, like alcohol, drugs, pork, pornography, and some aspect of the entertainment industry. They are also abhorrent, which is why when these institutions they get involved with financing aspects of the entertainment industry or the leisure industry, like travel and hotel, they are very scrupulous in screening and monitoring the type of activities that have been done in these institutions to make sure that what they choose to do is acceptable to the tenets of the Sharia. So basically, that is why you have a Sharia governance framework that has a body that makes pronouncements of Sharia compliant of the products, and then you have a Sharia compliance unit that ensures compliance to the pronouncements, and then an internal Sharia audit, which in addition to the normal audit of financial institutions, they engage in a Sharia audit of the products, processes, and the instruments that are offered by the institution to ensure that they complied with the pronouncements, to ensure that to give assurance that that compliance, which they claim to have been realized, has actually been realized. Uh, so in doing this, it has an array of instruments, more than the kind of instruments that you have in conventional banking. You have instruments of uh, uh, exchange that are based on exchange of buying and selling, or that is the cost plus buying and selling, which is called murabaha. Then there is also the fixed payment, the immediate payment cost, the spot payment, and deferred delivery, which is called salam, which is very useful for certain kind of fungible items like agricultural products. And you have also a manufactured sale, which is called istisna, and you have also lease contracts, which are also exchange days. And then you have partnership contracts, which are used both on the asset and on the liability side to generate income, to generate deposits for the bank, and also to generate a return that will mimic the fixed deposit account return of fixed deposit in account holders. These partnership contracts, they create value for the industry, and you also have supporting contracts like the agency contract, like the contract of given waivers IBRA, and the contract of guarantee, which is kafala. So based on these instruments, so many products could be structured for the non-interest financial institutions, especially in the area of banking. And now these institutions, they have uh, they have progressed in issuing capital market instruments that are used for long-term financing, which are the so-called sukuk. We are all aware, we are all aware of the massive strides that Nigeria has achieved in introducing the sukuk instrument in the financial market, which has been able to serve as a source of covering the infrastructure deficit that we have in the country, and then providing returns, modest returns to investors, especially the high net worth individuals, as well as institutional investors like the banks, including even the conventional banks that have heavily invested in the sukuk, as well as the pension fund administrators, the fund management entities in the capital market, mutual funds and unit trusts. They have all heavily invested in the sukuk. And now the banks themselves have started issuing sukuk based on the instruments that we mentioned. Alternative Bank, you are all aware, is just about to issue its Ijara Sukuk and its Mudaraba Sukuk, two kinds of sukuk that are based on these instruments which I mentioned earlier. Jaiz Bank had earlier, it's also about to issue its Mudaraba Sukuk. Earlier, before then, Taj Bank had issued the second tranche of its Mudaraba Sukuk, which is a perpetual Sukuk that fulfills the requirements of high liquid assets as enshrined in Basel III. So it serves as an additional tier one capital, which is it has the feature of perpetuity and callability after a certain period of time. Now, all these strides they uh, uh, they, uh, they they necessitate that the financial reporting of the transactions of these institutions, they are given a special treatment, which is why the Financial Reporting Council came up with its policy statement, a very significant one, that it will recognize the financial accountings issued by the Accounting and Auditing Organization for Islamic Financial Institutions, the IOFI, for those contracts that are specific to Islamic financial institutions, and they are making strenuous efforts to finalize the adoption of these standards, which for banks it is very, very important to know these standards and also adopt them, because the guidelines, they have clearly said that in addition to the international financial reporting standards, the IFRS, the banks will also use the financial accounting standards of IOC for those contracts that are specific to Islamic financial institutions. Uh, Now, all these entails that producers of software that will capture these transactions, they understand the nature of the products, because many of these products, they are the basis, the issue of timing is very, very important in the execution of the contract, because that may determine that may determine whether an income is recognized or is de-recognized as an unpermissible income, especially in transactions of exchange, whereby under the Sharia, you are an individual or an institution is prohibited from selling an item until until it has taken full possession, constructive or real possession of that item before entering into a contract of sale or a contract of lease for that item. So when you are booking such a transaction, if you just book it based on the signing of the master agreement with the customer and the disbursement of funds even before the institution has taken possession, then whatever is realized as income, as a markup payment from that transaction or a rental payment from that transaction, it will be regarded as non-permissible, because the ownership of the item has not transferred into the ownership of the institution, so it cannot derive benefit from it. That's why we have a maxim that says benefit or profit follows liability. This shows that there is the need for developers of software for the industry to understand the contracts, to get trained in the Sharia issues that are pertinent to the contracts that are being used by the banks. And as I said, this is not just a case of lending and borrowing as you have in conventional banking, but it's a full array of contracts that need operators, uh, financial engineers, and product developers, as well as software developers. They need to understand Hello?
Yeah, can I hear you?
Okay. So, sorry, I got disconnected again. So, as I was saying, there is it is pertinent for software developers, product developers, financial engineers, as well as the operating staff of financial institutions to understand the structures of these products and also the kind of documentation needed in the offering of these products so that you have so that you will have accuracy in terms of reporting and in terms of capturing the transactions as they are supposed to be, because a lot of these you know a lot of these you is needed in order to mitigate the so-called Sharia non-compliance risk, which is peculiar to these institutions, which is a kind of operational risk that impinges not only on the reputation of the industry of the entity, but on the industry as a whole, and also even on the returns that shall accrue to the institution, because it may be the basis for the derecognition of income. So that is why it is very, very important that expertise is deployed in this area, and the way to deploy it is through constant training and engagement, and first and foremost, building capacity in the essential principles and knowledge that is needed for operators in this industry. So I think I will stop here, and maybe if there is chance before I start my next engagement, I will be able to answer some questions that may be raised. Thank you very much for listening, and I apologize for the haphazard network problem that I was having. Thank you very much.
Jazakumullah khairan, Sheikh. Thank you so much. I think we can just quickly take question and answer from people, because we know we have very limited time with us. So I think we have someone raised up their hand. You can also type in your question, and we're going to take it. So maybe we'll take one or two questions so that we can allow you to do, because I know that you have another engagement that's supposed to start now, which you're also the chair of that session. So please, someone's hand was up before. You can now go ahead and unmute and ask your question, please. Okay, maybe the person was just trying to react to it. Maybe that was when the person raised his hands up. I think at this point, I don't know if there are other comments. What's it called? So before we allow Sheikh to take his leave, and so that he can attend to others. So another thing that we can do again is that if questions comes up, it's a question that we can forward to you, and we can provide question, and we'll get back to that person when Sheikh responds to that question. Thank you so much, Sheikh, for joining us, and we will continue with this session now. But let me summarize a little bit of what Sheikh, the emphasis of what Sheikh mentioned. In essence, Sheikh mentioned, I started with the history of non-interest banking in Nigeria, and it talks about the importance of Sharia governance, and also the importance of the product type that we have. And he ended with a particular point, which is critical to the development of having a separate and unique core banking application. And that without that, beyond the name that you call that particular product, if you don't get it right from a system or infrastructure angle, then whatever you do might end up being non-permissible. And when a transaction ends up being non-permissible, that means it has to be channeled to what we call the non-permissible income. And that means that the bank or the institution is not allowed to earn that money legitimately. So he gave an example, a practical example of a transaction, like for instance, an ijara, where a system cannot simply call it an ijara. So from that system, you should be able to establish that the assets actually exist, and whether the bank owned that asset, and whether the asset was able to deliver. So all these governance structures should be in place that the system must be able to capture. And when the renter occur, and I know that phrase recently also passed a resolution that emphasized this, and also emphasized that the bank is expected, that all banks is expected to ensure that their core banking is able to, and no core banking can be able to do that except a core banking that has been dedicated to do this. The opening remark, which was supposed to have to make a little bit of adjustment by the co-founder and the CCO, in person of Dr. Joaquin Adebayo Adenusi, which is popularly known as Ogaris. He is a visionary technology entrepreneur and a distinguished global authority in strategy, risk, and Aquarian science. He also served as the vice chairman of Quadran Clark Nigeria Limited and a Prague Academia and adjunct professor at universities in US and UK. He holds a PhD from the King's College London and has a decade of global experience advising government, regulators, corporate boards across UK, US, Middle East, and Africa on governance strategy and enterprise resilience. Dr. Adenusi is a former director of UK Institute of Risk Management and recipient of the prestigious UK Risk Manager of the Year award, recognizing his contribution to advanced performance-led risk intelligence organization. He is known for translating complex risk theory into decisive execution action and remain the convener of the Nigerian Risk Leadership Summit. As the CEO of Peerless, he provides strategic direction and drive operational excellence, ensuring that companies deliver resilient digital infrastructure for emerging markets. And now, this is also an emerging market. And interestingly, a market that has its own unique risk. So please join me to welcome Dr. Adenusi. Dr. Adenusi, please.
Thank you very much for the elaborate introduction. Can you all hear me? Thank you. Good morning, everyone. Good morning, Professor Baksha. Thank you so much for that session. It was quite illuminating. It's looking at the originality of the non-interest banking and the differentiation which it has to the core traditional interest-bearing banking. And I think there are lots of benefits. I just want to say thank you for also breaking this subject down for us and allowing all of us to see one of the reasons why the right technology is actually what you need to be able to promote ethical banking, not just only in Nigeria, across Africa, even globally. And that's where we at Peerless we're really passionate about and what Nizan is trying to do. I just want to say thank you for your contributions. Thank you for your input. We look forward to more engagement with you. And yeah, I'm looking forward to the session. I know you have to go. I wish we had more time to be able to engage, and I'll be personally engaging with you. On behalf of everyone and our team, I want to say thank you for inspiring us, open our eyes to what's possible, and especially the products that are going to be the market soon, which everyone can take advantage, and how our technology can actually help lots of non-interest bearing banking and organizations actually scale up all these products that you've mentioned. Thank you. Have a pleasant time. Thank you very much.
Okay. So, yeah, most welcome. So I will take my leave now.
Prof,
thank you very much.
If you don't mind, Dr. Adenusi, there's a question that is in the chat box for Prof. I don't know if we can quickly take that before we.
Yes, please.
Okay.
Let him go.
Okay. So the question reads, Assalamu alaikum, Sheikh. Do you think regulatory body should review non-interest banking product and technology? And how do you think the approach should be for a tech companies? So I think the question is asking whether the regulatory body should also be reviewing, does not, of course, because the product regulators review that, but for technology. So he wants to know whether the approach of reviewing technology companies should also come in, beyond just the product.
Well, honestly, this has not been the practice, but the examiners, when they go to, before issuing the final license, normally they review the software. They review what is there in the technology, and quite a number of products that are technology based, they are presented to the regulators for approval. Recently, there was one such product, and definitely, if that product had gone to the market, it would have been a serious issue. But when it was presented, when it was presented to the phrase, when it was presented to the phrase at the central bank, it was clearly identified as non-Sharia compliant. It was so. I think there is the need for that kind of screening. If it is not, if not at the launching stage, but at least the examiners, they should be able to review the software and ascertain its efficacy and its accuracy in terms of capturing accurately and reporting accurately those products.
Thank you so much, sir. Thank you so much.
Thank you. So I'll take my leave now. Thank you very much.
Thank you. Thank you so much.
Successful
It's a
delivery.
pleasure having you. Thank you so much, sir. Thank you.
Thank you.
So, Dr. Adenusi, you can go ahead, sir.
No, I think I just want to reflect on Prof's session, and then to just comment some of the key, talking about different products that's this kind of non-interest bank account perform, and the fact that where we are at Peerless and what Mizan is positioned to do is to enable a lot of banks and commercial financial services to go to the originality of what the real non-interest finance or non-interest bank is about. So that's just my comment for now, and I'll hand over to my colleagues who have a poll. I think we have a poll that they're trying to share, and I'll let them go ahead with that before we proceed to the next speaker. Thank you.
Thank you. So we'll have the poll now. Thank you.
All right, so the poll is going to be added into the chat box now. If you are here and you work in a finance organization that offers non-interest banking, please just take the poll, and it's just within a few seconds, and we're done. Thank you. The link is now in the chat box for everyone. Thank you. Please, if you can see the poll, just give me a thumbs up so that we're sure that everyone can see it. Okay, great. Thank you. So we're just waiting for the answers, and then we would be projecting some of the responses we've gotten as soon as we have them coming in. So we're just waiting for the responses to come in. Okay, so we've gotten. So currently the first question is basically asking, how does your institution currently manage non-interest banking compliance control? We have just about 2 persons who are currently not sure about how that happens. Someone has said it's mostly through document and manual review. We also have someone who thinks it's strongly embedded into system workflows. And then we're just waiting for more response because we know about 18 people have attempted. So we have 5 responses so far. But yeah, this is just to give us an initial view of where most of the organizations who are on this call are with managing non-interest banking compliance controls. And that will then lead us into the next phase of the conversations. So whilst we keep an eye on this as it progresses, I will hand over back to the moderator to take us into the next segment.
Thank you. Thank you so much. So the essence of the poll is not to look for a right or wrong question. It's just simply to understand where the institution, where institution represents today are on when on this journey of the non-interest banking, and so it also set a pace as to what Professor Bashir also said. And interestingly, Phrase recently also passed a particular resolution, which the focus is now on core banking because they've seen the importance of the core banking application. This is the first time Phrase will emphasize on the core banking. It has never happened before. The emphasis has always been on product. So meaning that there's a shift and there's a recognition that there's an important infrastructure part which will be very important. And this is going to lead us to the product conversation, which we're going to have with Osad Dome, as we popularly call him. So he's going to lead us with the discussion around what's it called. So a little bit about him. He's the product leader and product architecture with over 10 years of experience building digital products around fintech, banking, and enterprise technology. He currently serves as the head of product organization at Peerless Software Global Services, where he leads product management, product design, and product architecture around companies' product suite. Around the company product suite, with a background spanning software development, product design, and product management, Domain brings a multidisciplinary approach to solving complex business problems. He played a leading role in the strategy and delivery of CBAS, a homegrown enterprise core banking platform, and lead the product architecture and design of Mizan, an Islamic core banking solution. His work spanned core banking, digital lending, digital banking, and is passionate about combining product thinking, design, and technology to build practical solutions to meaningful business problems. So join me in welcoming Domain. So Domain, please, you have the floor.
Thank you, Lukman. Thank you. Thank you, everyone. Good afternoon, or good morning. What's the morning? Good morning, everyone. Thank you for the opportunity to speak in this series of the Peerless Horizon webinar series and all. I want to especially thank, I know he's not here, he already left the call, but I want Lukman to extend my appreciation to the prof on his, detailed walkthrough of Islamic banking from an African perspective into Nigeria and all, and even talking about the principles, the different products, the transaction uniqueness of Islamic banking contracts and all. And I'm happy that he touched those key areas because that's what I was speaking about in my own presentation and all. So thanks to the professor, thanks to our CEO, Dr. Joachim, for giving me the opportunity to speak on this forum. So let's get into the matter for today. And permit me to share my screen because I have a slide to present. Can I share my screen?
Yes, you can. Go ahead, please.
Okay, perfect. Okay, like I said, the professor already touched on key identifiers or key issues
that we're experiencing in the Islamic banking space today. So I want to talk about how we even started this journey of building, an Islamic banking solution. When we embarked on building an Islamic banking system, we initially approached it as a product problem. Again, it was an attempt to build a solution that will, fit the markets. So we were asking, we're thinking about what features does an Islamic banking need, what are the capabilities doing, what are those capabilities we need to build into the products and all. But the deeper we went into the domain, because we started with domain understanding and domain research, the more we realized that the problem was much bigger than features. So Islamic banking is an evolving domain, and the prof mentioned it. I think it's about a few years in Nigeria and Africa and all. New structures are emerging. Standards continue to develop, and institutions continue to refine their operating model. It's also highly governed, because while we're doing this domain research and everything, we found out that there are different Islamic bodies that have standards, that have unique standards that guides Islamic banking transaction and contracts. These are principles and standards defining how contracts should happen. And he mentioned it. He made an example of Murabaha. But we encountered another reality in the markets in when we're doing our research. There can be there's a gap between what standards prescribe and what happens operationally. And I'm sure a number of us in Peerless has come to understand that reality. So this is not necessarily because the institution do not want to operate according to the standards. Sometimes their operational reality or the operating reality is constrained, by the technology that's available to them and all. So you can see that there's a gap. Now that became the problem we wanted Mizan to solve. You see, so policy tells the institution that what should happen. But again, operations are where banking actually happen. And as you can see, technology sits between these two worlds to bridge that gap. So instead of technology forcing the institution to compromise its operating model, technology should help make that operating model executable. And that's what that changed the way we thought about building Mizan. We stopped starting with features. We stopped thinking about features. How do we start with these features? How do we add these features or give us the features list? We went back to the principles that define the ideal non-interest banking model. We came up with while we're discussing and all, I really think the best technology question we should be answering, because in Peerless, when we build products, we are not just building a product that will fit the market, but are building a product that will fit every customer in the market. So configurability is very key in our product building. So we started asking the question: how do we build a system whose behavior naturally supports these principles while still giving Islamic banking or non-interest banking institutions the configurability and the flexibility they need at the end of the day? Now, we came up with these 4 principles, and these are not presented as the entirety of Islamic jurisprudence. They are 4 principles that had a profound implication for the technology architecture that we built and all, and it governed the operating behavior that we thought we need to support the application. Now, I will go into the next part of my presentation. We demonstrate or show how each of these principles influenced the Mizan architecture and how Mizan behaves, or how Mizan has been developed to solve these problems, to bridge that gap, as we will say. Now, let's start with 1. The first one is legitimate and return. Before I even start explaining them, let me just give an insight into each of them. So, and I want to draw insight from what the professor said. For the first one, I talked about legitimate return. He mentioned that returns must be based on actual real economic activity, and the returns coming into the Islamic bank from financing they have done has to be legitimate, not riba. That means it cannot come from financing industries that are not permissible. that drives me into the real economic activities. That means your return should be based on real economic activities. It's not just like conventional where you just disburse funds to a customer because the customer needs funds. He mentioned something about it must be based on an economic activities, meaning that there should be an asset involved. And when he made an example with Murabaha, you can see that asset definition or asset ownership for the bank is an important part in Islamic in such contracts, which is totally different in the commercial space and all. Then there's transparency. We believed, or from our research, we encountered this principle in Islamic banking where there has to be transparency between the funds coming to the bank and how the funds are used and how the profit coming from these funds that are coming from financing deals are distributed between the customer and the bank. Lastly, there's the issue of the principle of profit and risk participation. In several Islamic contracts, they are guided by profit sharing and loss and risk sharing as well between the customer and the bank. And again, all these principles lay the foundation for the architecture of the solution. In fact, down to the name we give the product, but we'll get there. Okay, now back to legitimate return. Funds enter the bank through, I love defining it this way. Funds enter the bank through, customer deposits, investment arrangements. Those funds can be deployed into financing and other permissible economic activities. This is the reality. This is the principles of Islamic banking. Those activities will generate profits or generate returns, and depending on the underlying contracts, the resulting profit can flow, to the bank and the participating investors. That's the way that's the structure or the concept of Islamic banking. The system therefore cannot, simply manufacture returns or returns from money, time, and rates like conventional banking. No, it needs to understand the underlying products and contracts that generate that return. So it's not just the money coming in. How did the money come in? Where is it coming from? So this created the need for our financing architecture for us to be the financial architecture that is capable of supporting products structured around approved Islamic contracts and all. Now, let's take us to the financing model. Mizan was deliberately not designed around finance catalog of contract-specific product engines. Now, he mentioned Imrabaha, he mentioned Ijara, he mentioned a couple of approved Islamic contract type. But again, these Islamic contract types serve as an underlying, principle, an underlying foundation for different Islamic products. You get, so instead of restricting it to these contract types, what we built, it provides a unified financing product framework that allows banks, financial institutions, non-Islamic financial institutions to build or configure their financing product around different approved Islamic structures. So we have a product component builder that has a list of Islamic contract components that can be used to build your desired Islamic product with different limits, different controls, and all. Now, this is what supports the contract structure required for today's approved Islamic contracts. And yet, while making the we have made the architecture more configurable or extended. You can extend it to fit or to build upcoming Islamic contract types, maybe in the future, depending on how the Islamic bodies today, dish them out. So we didn't want the core banking technology to become a limitation or a limitation on evolving contracts and all. That's why we built a unified financing product framework that accommodates any financing contracts. For example, let's talk about Murabaha. At least this is one of the contract types he mentioned. In Murabaha, the economic substance is not simply that a customer needs cash. The needs for the customer, the need that the customer has is an asset. And normally, even in conventional banking, when the customer is booking for a loan and all, he needs to use the loan for something. He wants to finance something. But in conventional banking, the bank doesn't care where he's using the money for. But in Islamic banking, the customer needs an asset, actually, and needs money for that asset. But again, that customer, the bank doesn't just dish the money out to the customer. No. The customer needs cash, and the bank, in a commercial, the customer needs cash, and the bank lends cash to the customer. No. The bank is required to own that asset, to purchase that asset for the customer, and then sell to the customer. So the bank acquires the assets, ownership is established, and the asset is then sold to the customer at a markup price, what we call an agreed price. You get, that's how the bank makes profits. These steps matter. Ownership of that asset by the bank before it's moved to the customer matters. The asset itself matters. So there's a sequence that it follows, and that sequence matters. So it's not just a transaction. A transaction in conventional banking is a debit and credit, but in transaction in Islamic banking is beyond the debit and credit. It has several layers that needs to happen, or that needs to be noted before a contract can be termed as permissible. So where a financing structure requires underlying asset, underlying asset, underlying ownership, and what have you, the solution we have built allows that financing transaction to be connected to that asset. That financing transaction is connected to that asset, like the asset life cycle from beginning to the end, through our asset management system. So it is not just simply disbursement. There's a transaction pattern that needs to be followed. And a story, I like to term it as a story. Every transaction has a story that can be audited and all. Now, let's go to the next one. Principle number 3, rather, transparency. Now, transparency cannot just mean only displaying the contract terms for a transaction or a deal to a customer. It should also mean being able to follow the economic journey of the funds in that transaction. Where did the funds come from? Which pool did the funds participate in? What financing activity, or what were the financing activities that were deployed to disburse that fund? What income did that activity generate? You see that it comes that actual economic activity playing into the transaction that we do in Islamic banking. Now, what returned to that pool as profits, and how is that profit distributed between the customer and the bank? So for different things in the bank, like for management, for operations, for Sharia audits and Sharia governance, you should be able to trace that economic journey end to end, that story from that transaction story from one end to the other. That's what really reflects the true ethos of transparency. Everything can be seen. That's why you can actually say this is a permissible income, or no, this is not permissible income. Now, let's paint a full picture. Transparency is not only being able to see where the money went to. Again, like I said, unlike conventional bank, we just see that the money was disbursed. It's also about being able to explain why did this money move? Why it moved the way it did? Because again, I told you that first of all, the customer has a need, then and tells the bank purchases that asset from the vendor. And then the bank sells the asset to the customer. You see how money is moving. It's different from the way it will move in conventional. Then you ask yourself again, what contract governed this transaction? What financing deal was generated or was created in the course of this transaction? What are the approvals that are called? What level of approval? Because the workflow for conventional, it can be different from the workflow for Islamic bank for Islamic transaction. Because again, there's a Sharia board or the Sharia audit team that wants to review the contract before it's finally approved and all. What accounting entries resulted in this transaction? What sharing formula or contract type that involves the sharing arrangement between the customer and the bank? This is where reporting and audit trail become part of the behavior rather than just merely a function of the system. Good. Now, let's move into principles. The first principle, profit and risk participation. Remember when I defined this in the beginning, I was talking about how there's several financing contract type that allows the customer and the bank share profit, or the customer and the bank share the losses or risks in a particular deal. So different non-interest contracts allows participation with different configurations. So Mizan therefore did not, we didn't just impose one universal profit model or profit return model to the system. For relevant structures, the system supports configured participation, sharing arrangements according to the governing product and contract. So you see that there's a contract or product that is governing every financing deal, and thereby governing the way profits and risks is shared between the bank and the customer. So the important message here is that profit and risks, the treatment of profit and risks follows an underlying contract. Perfect. Now, you can see that from the presentation I've done, the rationale to building Mizan was very, very intentional, down to its name. The name reflects, you can see that the Mizan in Arabic means balance. That was a means in Arabic. The name reflects what's the word now? Yes, a philosophy behind the products. So it reflects balancing principles with flexibility. What is the policy saying? What can the customer or the client or the financial institution do? It's balancing governance with innovation. Yes, we want to be future forward, but again, we need to have governance and control. It's balancing policy with the operational realities of today's real world banking scenarios or banking operations. So what's the word now? Where all these different balances apply or are applicable to the underlying contracts, that balance should be seen on the technology, which is Mizan. It also reflects the balance between economic participation, between the customer and the bank. And that's why when you see the logo of Mizan, it's not just a random logo. It's let me go back to the beginning so you can see the logo. It's actually two symbols representing the bank and the customer balanced on a scale. And that's the balance we try to attain between policies and standards and then the operational reality. We believe that technology and or in this sense, Mizan is the balance or the bridge between those two realities. That brings me to the very end of my presentation. One more thing before we wrap up. Again, this is the goal we're trying to achieve, where Mizan is bringing that balance between those two realities. But that doesn't just solve the problem we encountered in the industry. Technology cannot decide an institution's operating model or replace governance. The institution still requires appropriate knowledge. They need to also flesh out their governance structures, their policies, their processes, product structures, because again, that institution needs to have an operating model. Technology's role is just to make the agreed operating model executable, can be repeatable, can be done over and over again, automated, controlled, and lastly, it can be audited. So it has to be auditable so that reports can show that your income or your profits are actually permissible. So the core should not, the core banking or the solution should not enforce the operating model. It should have it should enforce the operating model and not reinvent or try to force the bank to, the financial institutions to adhere to the principle or to a counterfeit operating model. Yeah. So it needs people. The industry needs processes to be aligned with technology for this to work. Thank you very much. Over to you, Mr. Lukman, for questions and all. Thank you. Hello, Lukman or Lumide, can you hear me?
Yes, I can hear you. I'm trying to see if Lukman is still on the call, but yeah, thank you very much for that explicit explanation of the philosophy, the thinking, the mindset that went into building
I'm sorry.
Mizan. Okay, you are back. Welcome.
Thank you. Yeah. Thank you, Dome, for the interesting section. Like you emphasize, that technology actually helps to execute majority of, because and I like the fact of the emphasis that you made, that beyond the technology, the governance is also as key, because there is need for transparency and also disclosure as far as this product is what's it called, building a framework that was called, and I think your name should not just be your title should go beyond products. What's it called? I think it's infrastructure. This is an infrastructure, not just product. It's not like a single product, it's an infrastructure. And
Yeah.
I've seen the amazing work that you guys have done so far. Thank you for the session. I think we'll go to the second poll, right? Before the question and answer.
Yes. I will just quickly, there is an interesting part of the poll here that I would like to share quickly. So just give me a few seconds.
Okay.
To bring that up. Please confirm once you can see.
Yes, from my hand.
Oh, okay. So this part asks, what is the biggest infrastructure concern for your institution today? And we got 7 responses. 4 of them says our current core was not designed for non-interest products, which shows that that's one of the prevalent challenges we have in the market today, and Mizan is here to solve that. We also have 3 people saying we have we have to make too many manual patches to make our core work, which is also a very attendant issue that Mizan as an infrastructure is here to resolve. And then we have one person saying the product setup takes too long, right? And then another one says integration with digital channel is difficult. So these are real problems. And I believe that with some of the things that Dune has already shared, we will be able to resolve that. And we also have someone here who says, not sure where the real gaps are. So that person would, we would like to also know that person, because that takes us to the third question that we have asked, which is to ask what would be most useful to your institution after this webinar. We have 4 persons who have already indicated that a technical demo session will be very important for them. A private Mizan readiness review is also what 3 other persons have requested. And I believe the person who said they're not sure where the real gaps are will need this private Mizan readiness review, particularly to be able to spot where the possible gaps are and how Mizan is positioned to resolve that problem. So we would like to contact you guys at the end of this session so that we can set up these demo sessions and as well as the readiness review. Please look out for our emails. But yeah, I would hand over back to Lukman now as he takes questions and helps us round up the session. Thank you.
Okay, so we'll just go straight to the question, and because of time, we'll just go straight to the question. So if you have any questions, you can drop it in. So like I promised earlier too, even if you have a question that is for Prof. Bashir, I promise to get it down across to him, and the team will get it down back to you, his response. So even if you have a question for him, if you have a question for the Peerless team, so we are here. Please, you can drop in your question, or you raise up your hand while we'll ask you to just speak. I guess there are no questions. Is there any question in the chat box? Okay, but okay, there's a question. For you, Dome, I think there's a question. So the question is, can you let us know what the standard I believe accounting principle that Mizan already comply to, local and international recognition?
Okay, thank you, Lukman. Thank you, Mustafa. Yes, just same response from the professor. Yeah, so there are the standard accounting principles that are laid down by IOFI, the international regulatory body for Islamic banking, and also Mizan complies with those standard accounting principle as well as the IFRS principle, because it's a balance of both. While IFRS is still responsible for the standard of normal accounting principles, IOFI also has some principles that affect the way financing transactions, profit sharing is done, which is not available on conventional core banking. Yeah, I hope that answers the question, Mustafa.
Thank you, Domain. So I would like to put some addition to what you just said, and also in line with what Professor Bachir mentioned. And something significant happened, I think, towards last year and this year. In fact, last week he was also at the session where FRC, that's the Financial Reporting Council of Nigeria, they are the one in charge of annual reporting, the way what should be in the annual report, how the a financial institution or a company should report their annual report or their financials, how it should be like. So now, last year, they made a pronouncement that they are in plan of integrating IOFI. And IOFI means Accounting and Auditing Organization for Islamic Financial Institution. They said the standard for non-interest banking, that's Islamic bank, globally, not just in Nigeria. So they also want to adopt it. So last week there was a session in Abuja, a 3-day session where they looked at how to adopt some of these things in the financials. So what it means is that the moment FRC adopts it, so it becomes more mandatory. Now, the adoption of IOFI is more voluntary, but there are some unique things that, of course, that in line with IFRS, you might not be able to report those unique products that we have. But now, when they adopt some of those standards, because there are some financial accounting standard that is released by IOFI, so it will now be it will not be mandatory, so it will not be voluntary for any company or any Islamic financial institution to ensure, because they are not just limited to bank, they are for all companies. So if whatever and you are you are under their purview, you must report it that way. So, and I think that's the response from says that Mizan also already got discovered. Thank you. There's another question from Mr. Musa Rahim. So the question is, what are the contents of other structure and future structure apart from Rabbi, Ijara, Musharaka, as you mentioned? So I think the question is that beyond these 4 products that you have mentioned, that does Mizan covered all other products beyond just Rabbi, Ijara, and Musharaka? If it doesn't have it now, is there a plan for it in the future?
Okay, so these are I just use the 3 easiest financing contract types to demonstrate the unified financing product framework. So what we have on Mizan is not a Muraba contract type or a Jira contract type. We have a unified framework that enables you to build any of the contract type using different contract components. So that's why you have other structures here and all. As many contract type as is approved today by the Islamic bodies, you can build them on Mizan. And it also accommodates the what's the word now? The build or creation of future approved contract types. So there's no limit depending on it depends on how many is available, how many is approved for your institution. Yes, Musa.
Okay, so in essence, whether the contract is based on a sales-based, trading-based, or a lease-based, or it's a partner structure, Mizan can handle it.
Yeah.
As long as it has been approved.
Yes.
Okay. Thank you. I think that answers the question. Okay. Is Mizan a shared resources? That's the next question.
Okay, so Musa, I think you are asking if Mizan is available on a SaaS infrastructure. So today we can deploy Mizan to you on your own infrastructure. It's not available on cloud yet, and all. I think that's part of the roadmap conversation that we're having. Yeah.
Okay.
So I think if you want more response, Musa, to that question, you can just.
I think one of the things that would be good is to have a private session, just like
exactly, so that we can engage you personally
with Mr. Musa. Mr. Musa is from the name, I think I know him. So he's MD of Ayat Microfinance Bank.
Okay, nice to have you here, Mr. Musa.
Okay, so I think there are no more questions. So I think is there any other?
So there is a new question actually.
Okay.
Maybe we just allow a few more minutes for more questions.
Okay. Can Mizan only work in Nigeria or all Islamic bank jurisdiction?
Okay, Mustafa. So yes, Mizan is not just built for Nigeria; it's built for any jurisdiction. So it's not limited to Nigeria or Africa. You can work in any. It works same way in every other space. So it depends on the configurability, the configuration that has been done on Mizan for that particular space. That's why we talk about flexibility and configurability, even with the principles enshrined in the behavior of the product. Yeah.
Okay, so in essence, even if there are some products that are approved in a particular jurisdiction, Mizan can also be adapted to
Yes.
that. Yeah. Okay.
Yeah.
Thank you. Okay, maybe we'll wait for a few minutes when some people are still asking questions. So. Do we have another quiz after this?
No, we've covered everything, which is
Okay.
just the last one, asking what people would prefer, what people would want after the webinar. And we've seen 8 responses. 4 of them want a technical demo session, 3 want a private Mizan readiness review, and someone has just requested the webinar recording and a checklist that will be shared at the end of this webinar for everyone. Just to also help you assess your internal readiness for, non-interest finance as an institution. So we'll be sharing all of that in the email after this webinar. So please, let's look forward to that in our emails. Thank you very much.
Okay, we also have one question again. Do you have any clients on Mizan currently, and what have been their experience?
Yes, Mr. Mustafa, we have 2 clients going to the 3rd client on Mizan, and currently, in fact, I'm not sure we did the migration for Bank from their previous core banking to Mizan some weeks back, and I'm not sure the industry even felt any shake and all. So yes, we have customers on Mizan, and that should tell you how balanced or stable the solution is. Yeah. So we can engage. I think Olumide can provide some details. We can engage to talk about other questions you have on Mizan. I think what we have shared so far answers the surface questions and all. But if there are other questions, I'm willing to respond to.
Yes, the other question, interesting. So the question is on data now. So how does Mizan approach data privacy and compliance with Nigeria data protection regulation, particularly with the evolving regulation around data residency and the local hosting of sensitive or personal data?
Okay, thank you, Joseph. So again, the Mizan core banking is the application, and it sits on your the bank's infrastructure, the infrastructure or the local infrastructure or the financial institution. So again, that already covers privacy and meets the compliance around data protection. Since you have a local infrastructure where Mizan can easily and comfortably operate from, then it already meets the requirements. Yeah. And for our other solution, that is CBAS, that's already on cloud. We have CBAS SaaS, and it's also, even if it's available for different customers, it's also locally hosted, so it's also meet that compliance. Same. So in the future, when Mizan has that, coverage, it will also be on that same infrastructure locally.
Okay, thank you so much. Thank you so much. I don't know. Okay, so I think at this point, we would like to would like to appreciate Professor Bashir Umar, Dr. Joachim Adenosi, and Mr. Dome for sharing their perspective and experience with us today. I would also like to thank everyone who joined us, those that participated in the polls and contributed with questions to the discussion, and also for the institution that would like to take the conversation further. Mizan Readiness Review provide an opportunity to examine your current operating environment and identify areas that might require further attention as you build or scale your non-interest banking operations. So on behalf of the Peerless Software Global Services and everyone involved in Peerless Horizon series, thank you for your time and participation. We hope that today's conversation have been both beneficial and useful and thought-provoking to you. Thank you very much, and have a wonderful day. Thank you.
Thank you, everyone.
Thank you very much. Thank you, Lukman. Have a great day, everyone. Bye.